Hello students. In this unit we are going to learn about Indian accounting standards, which is also called as IND AS, and International Financial Reporting Standards, or we can call it as IFRS. So let us have an overview of IFRS. IFRS are global accounting standards set by the International Accounting Standard Board. They help to maintain consistency, transparency, and comparability of financial statements across the world. In short, we can tell IFRS provides a common language for financial reporting internationally. Now let's look at the India's approach. India has not fully adopted IFRS. Instead, India has developed its own version of Ind AS, that is Indian Accounting Standard, which are largely based on IFRS. But it is modified to suit India's legal and economic environment. So, what's exactly Ind AS deals about? Ind AS, or Indian Accounting Standard, are the accounting standards that is notified by the Ministry of Corporate Affairs under the Companies Act 2013. Their basic aim is to align with the Indian companies with global reporting standards while still fitting India's business needs, basic business needs. So let us move to the main objective of Ind AS. The core objective of Ind AS is uniformity, transparency, and global convergence. What is exactly uniformity deals with? The basic objective of Ind AS is uniformity. It ensures to bring consistency, and it helps us to compare the financial statements of the other company. Also, when we are talking about transparency, Ind AS provides us to make a financial report more clear and reliable for the investors. Since the company has to protect the interest of the investors, transparency plays a key role in it. The next objective is global convergence. To align with practices with international norms, facilitating global business operations, cross border investment, and enabling Indian companies to deal compete effectively in international market. So to align with Indian practices with international norms for a better global business opportunities. That is what the three basic objectives are. So once again, let's have a recall. The core objective of Ind AS is uniformity, transparency, and global convergence. So next, let's see the importance of Ind AS, the strategic significance of Ind AS. It gives global recognition to the Indian companies, which improves comparability of financial data worldwide and ensures regulatory compliance under Companies Act. So we have 3 points, right? Global recognition, enhanced comparability, regulatory compliance. So adoption of Ind AS enhances the credibility of financial statements on global platform, aiding Indian companies in attracting international investments and building confidence among the global stakeholders and rating the agencies. So this is what we can learn from the global recognition in Ind AS. So the main importance is global recognition. That's why we are following Ind AS, right? So then the next point is enhanced comparability. It is easy for us to compare our Indian company's financial report with other company. That's what it is given. It allows for a meaningful comparison of financial performance across the company worldwide, enabling the investors to make informed decision. Yes, right. Once the investors are aware about the financial statements, they can take decisions, right? and facilitating benchmarks against international peers in similar industries. The next one is regulatory compliance. It assists in meeting the statutory requirements under the Companies Act 2013, ensuring that companies maintain compliance with evolving regulatory framework while supporting good corporate governance practices. So, when we're talking about regulatory compliance, Ind AS specifically ensures that regulatory compliance is done under Companies Act 2013. The recent Companies Act is 2013, right? So, regulatory compliance is maintained as per Indian accounting standard. Okay. Now let us understand how these standards are formulated and the process is done. So the first very first stage is proposal stage. A proposal is made by ICAI, that is Institute of Chartered Accountant of India, or other stakeholders, identifying the need for new standards or modification to existing ones based on emerging business practices and regulatory requirement. So, a need for a new or a revised standard is identified in proposal stage, right? So, the next one is public consultation. A draft is prepared and shared with the public for comments, ensuring board stakeholders' participation, including industrial experts, then practitioners, academicians, and regulatory bodies to gather a diverse perspective and insights. So the second process says public consultation, which the summarized point is the draft is to be shared for feedback from the experts and from the public. That's what they are given. They have given. The next one is revision and finalization. The third process, the third step is revision and finalization. In this, based on the feedback received from the previous process, that is the consultation process, the draft is carefully revised, incorporating valid suggestions and addressing concerns to create a comprehensive and practical standards. So the revision and finalization point says that from the previous consultation process, the draft is improved based on the suggestions given from the public. Okay. So the fourth point is official notification. So, and the final point, finally, the standard is approved and made mandatory by the government. So, from the suggestions given from the public, the suggestion is improved and revised and they are finalized, and they will provide an official notification. So the MCA notifies the standard, making it mandatory for the specified classes of companies, establishing legal enforcement and ensuring uniform implementation across the corporate sector. Okay, so this is all about standard formulation. In this we have three processes, three stages in that process. So the first stage is proposal stage, then public consultation, then we have revision and finalization. Based on the previous process, we will have revision and finalizing the points, and once it is finalized, we will move with the official notification. That's the final steps, final process. Now let us have a quick look at some key points in Ind AS. As per your syllabus, we have these following Ind AS standards. So let us have a quick look. Ind AS 1. So Ind AS 1 deals with presentation of financial statement. This provides a comprehensive guideline on the presentation of financial statement to ensure comparability with the previous periods and other entities. Of course, for comparison for your company itself, you need a proper format, right? In order to have a proper format, the presentation of financial statement is stated in Ind AS 1. Okay, Indian Accounting Standard 1. This standard establishes the overall framework of for the financial statement presentation, including the format, that is the structure, content and disclosure requirements. Okay, all these are given under Ind AS 1. So in short we can tell Ind AS deals with how financial statements are should be presented. The second point is Ind AS 2, valuation of inventories. This prescribes the accounting treatment for inventories, including measurement and recognition of inventory cost in financial statements, which covers the cost formulas, net realizable value assessments, and specific guidance for different types of inventory items. So Ind AS 2 deals with it actually explains how to value the inventories. So Ind AS 1 deals with how financial statements are presented, and Ind AS 2 deals with how the inventories are to be valued. Okay, so the first two we have seen. So we'll move with the next one, that is which talks about cash flow and policy standards, and the standard is Ind AS 7, which gives about statement of cash flows. So Ind AS 7 deals with statement of cash flows, which requires entities to present statement of cash flows detailing cash inflows and outflows over a period. For a period, how a cash flow is to be presented will be given under Ind AS 7. This standard categorizes cash flow into operating, investing and financing activity. So in future you will be learning about cash flows. So under cash flow we have three different activities. One is operating activity, investing activity and financing activity. How these activities are to be presented under the cash flow statement, which provides a crucial insights into the entity's liquidity and cash management capabilities. So Ind AS 7 talks about cash flow statements and classifies how these cash flow are to be presented. Okay, so Ind AS 8, accounting policies, changes and errors. So Ind AS 8 deals with accounting policies, changes and errors. So it provides criteria for selecting and changing accounting policies, accounting for changes in estimates and addressing errors in the financial statements. So if there is any error that has found in the financial statement, how to rectify the errors, and it ensures consistency in application and proper disclosure of any changes that might affect the comparability. Okay, once we have completed our financial statement, if there is any error and if there is any changes in the accounting policies in that entity, how these are to be presented, how these are to be rectified is explained in Ind AS 8. So it covers the accounting policies, changes and errors. Okay, so the next one is assert recognition standards, which is Ind AS 16 and Ind AS 38. Ind AS 16 explains how to account for the property, plant and equipment. So let's learn about it. It prescribes the accounting treatment for property, plant and equipment, including recognition, measurement and depreciation. It also covers the initial recognition criteria, then subsequent measurement models, and then derecognition requirements for tangible fixed assets. If a fixed asset is having depreciation, right, we'll calculate depreciation. All these depreciation of the plant, property and equipment are done in Ind AS 16. Then we have Ind AS 38, it deals with intangible assets. Okay, so for tangible assets we have Ind AS 16, especially for property, plant and equipment, and Ind AS 38 deals with intangible assets. It covers with all the accounting treatment for intangible assets, including how to measure their cost and amortization. And it also addresses the recognition criteria, internally generated intangible assets, and specific guidance for research and development cost. Okay, so Ind AS 38 deals with intangible assets like patents and trademark, copyright, which is developed internally. Okay, so Ind AS 38 deals with intangible assets that are generated internally. Okay, so the next slide is business combination and consolidation related Ind AS. So the 2 points are Ind AS 103. Okay, 103. It deals with the business combination. It provides a comprehensive guideline on accounting for business combination, including acquisition method and how to recognize goodwill. It covers purchase price allocation, contingent consideration, and step acquisition in complex merger and acquisition scenarios. Basically, Ind 103, Ind AS 103 deals with the business combination and goodwill on acquisition, merging, and then amalgamation related concepts. Okay, and Ind AS 110, that is 110 deals with the consolidated financial statement. Okay, so don't get confused with Ind AS 1 and Ind AS 1110. Okay, Ind AS deals with the format for financial statement, how it should be presented. Okay, and this Ind AS 110 deals with the financial statement of a group companies. It covers the consolidated financial statement of the group companies. So this Ind AS 110 deals with the outlines the requirements for the preparation and presentation of consolidated financial statement, which includes the principles of control and consolidation. This addresses the subsidiary identification, non controlling interest, and elimination of intercompany transaction. So basically, Ind AS deals with the consolidated financial report of the group companies. Okay, so we have completed our fifth unit. If you have any doubt, you can ask me personally. You can post your you can post your doubts in the group. Okay, so let us have a quick recall about these Ind AS and Indian International Financial Reporting System. To have a conclusion, the implementation of Ind AS shows how India's strong commitment to the global financial reporting standards, and it also ensures that Indian companies remain transparent, comparable, and globally competitive. Okay, in order to have a healthy competition with the other entity, you should know to compare, right? You should know to compare your financial statement with other company. In order to compare, you should follow the uniformed presentation of your financial reports. In order to have a proper unified report, we have to follow Ind AS. So that is what we have seen so far. So basically, we have covered the fifth unit. If you have any doubt, you can ask me personally. Okay, thank you. Have a nice day. Thank you.